Good afternoon and welcome. Thanks for taking the time to attend the earnings release call at TDC and DKT during the summer holidays. My name is Henrik Nielsen. I am heading the Treasury and Investor Relations. Before we start, I would kindly ask you to mute your microphones, and we have them muted from this side. The first part of the conference call will be a presentation by Group CFO Lasse Pilgaard. Lasse will present the highlights of the quarter and then continue to take you through the performance of the group, TDC NET and Nuuday. After Lasse's presentation, we'll open up for questions. If you want to ask questions during the Q&A, please write your name and organization in the chat and we'll return to you. An alternative is to send an email to investorrelations@tdc.dk. And now over to CFO Lasse Pilgaard.
Thanks, Henrik. So let's turn to page 2, where I'll start by presenting the highlights from TDC Group in second quarter of 2021. So in second quarter 2021, we saw continued improvement in our commercial and financial performance, resulting in an 0.8% growth in EBITDA. If we're looking at the first half of 2021, that corresponds to a 0.5% decline. So today we're concluding that current trading supports our guidance for 2021 of stable to slightly declining EBITDA. For revenue, we saw an increase of 1.3% in Q2 compared to the same period last year. Gross profit declined by 1.6% year-over-year in Q2, which is a significant step up in terms of improvement from the 6.1% decrease that we saw in Q1 2021. For operating expenditures, we managed to do a reduction of 4.8% year-over-year in Q2, and similar for our capital expenditures, we saw a decrease of 13.7% year-over-year following the completion last year of the mobile network 5G swap. In June, we announced that TDC is now initiating the final phase of the separation to establish TDC NET and Nuuday as standalone companies. The process will be concluded end of 2021, at which time employees in the shared group functions today sitting in TDC Group will have been transferred to either TDC NET or Nuuday. Also, the future composition of the board of directors for both TDC NET and Nuuday will also be in place at this point in time. The separation of TDC Group will thus be completed, and the management of TDC Group will be stepping down, including myself. The objective is thus that TDC AS will be a holding company with Nuuday AS and TDC AS as operating entities at a standalone basis. We'll return to the quarterly highlights for TDC NET and Nuuday later in this presentation. So let's turn to page 3, where I'll focus on the TDC Group financial highlights. As already mentioned in Q2, reported revenue increased by 1.3%, while gross profit declined by 1.6%. As mentioned earlier, this is a significant improvement in trend, which really reflects the continued commercial stabilization that we are seeing in especially Nuuday. Also, the year-over-year effect of the commercial challenges in late 2019 and start of 2020 in the wake of the dispute with Discovery Networks has now fully normalized. The gross profit decrease continued to be mainly driven by our mature services, i.e. landline voice, low-speed broadband and traditional TV, and hence to a large extent is predicted and expected in this level. On the other hand, we see a good traction in our growth services, i.e. high-speed broadband on coax and fiber, flexible TV offerings including UTV, and our new mobile offering Easy. All these strategic initiatives supports basically the stabilization that we have seen so far in our commercial trajectory. In Q2, EBITDA, as I mentioned, increased by 0.8% year-over-year, triggered by the improvement in gross profit trend and continued cost reductions. If we look at the cost reductions, we saw an opex decrease of 4.8% in Q2, and as expected, the opex decrease is now at a more normal level, if you can call it that. We are still very happy with 4.8%, but we don't see the double-digit numbers as we saw in Q1, which I think I also alluded to was extraordinarily high. This improvement really reflects the large organizational change we did in Nuuday, which was executed in Q1 2020 with financial effect from Q2 2020. Meaning that we no longer see the year-over-year effect that we saw from previous quarter. Also, the COVID-19 effect on cost level, e.g. lower personal related cost, has now impacted the financials for over a year, and hence we don't see that in the comparison either. For capex for the period, we saw a decrease of 13.7% to 1.1 billion. The expenditure is primarily driven by fiber investments as the 5G swap has come to an end, and hence, despite the fact that we continue to invest at the same level and rate in fiber, we have been able to reduce with 13.7%. On leverage at TDC level, we remain unchanged at 3.6 times EBITDA. Going to page 4, we take a closer look at the development in opex and capex. In Q2, reported operating expenses decreased by 4.8%. In total, that equivalents to 59 million Danish kroner. The improved operating expenses were fueled through the continued cost-saving programs across the organization. OpEx is lower as a result of lower number of internal employees, both blue-collar and white-collar, and a reduction of external expenses across external vendors and customer acquisition costs. Looking at capex, in Q2, capital expenditures was 1.133 billion Danish kroner in total, a decrease of 13.7% compared with the same period last year. As mentioned, the reduction is primarily driven by the completion of our 5G swap last year, capital efficiency programs across the organizations really driven from fewer investments in legacy platforms and improvements in our fiber unit cost. After a temporary slowdown in Q2 in our fiber deployments due to COVID-19 and weather conditions, the fiber rollout is now running at full speed again, and we end up completing Q2 with 28,000 new homes passed on fiber. Also, we're still working on investing in splitting and renewing our critical IT to provide Nuuday and TDC NET with the best possible foundation as independent companies and market leaders. The IT development program is progressing according to plan. Or I should say the IT development programs, as there's two both in Nuuday and NET. On page 7, we focus on TDC NET highlights in Q2, and then we'll do the same for Nuuday afterwards. So starting off, just briefly on the financial highlights, TDC NET's EBITDA totaled 1.121 billion in Q2 2021, which is equivalent to an increase of 2.5% compared to 2020 Q2. This was driven by continuous cost saving in operating expenses, partly offset by reduced revenue from legacy TV offerings. In Q2, TDC NET continued to strengthen the position as the leading supplier of digital infrastructure, passing 28,000 homes with fiber. Thus, the fiber rollout regained the pace in Q2 after cold weather conditions and COVID-19 hampering the production in Q1. In addition, we reduced our fiber unit cost through renegotiation of supplier contracts and insourcing of approximately 100 FTEs from previous partnerships. As a result, capital expenses decreased in TDC NET with 17.1% year-over-year. Commercially, we launched a new fiber product, which will target small enterprises and hence they reuse or use our new homes passed network to also sell to not only B2C customers, but also B2B customers. In terms of the 5G network, we executed on a pilot project in the town of Nakskov, substituting a selection of residents' existing legacy internet connection with a fixed wireless access based on 5G with promising results. By utilizing our 5G network, dedicated hardware and frequencies, we aim to deliver reliable and fast connections with speeds up to 200 megabits to residential in rural areas. Also on 5G, we continue to see a pickup in the data that is on the 5G network in our mobile network, but more positively, given the fact that most of our data is still on 4G, we see a significant uplift in the speed that we're able to offer our customers on that 4G network after the swap. And for majority of the customers, that have meant a 2x uplift in speed experience on the 4G network due to basically just having a more effective network than we had previously. Last but not least, TDC NET signed an agreement with Better Energy for the supply of electricity from 4 new established Danish solar parks. This will allow TDC NET to cover 60% of the energy consumption in 2023. So on page 8, we check in on the financials of TDC NET. Most of the things I've mentioned already. TDC NET EBITDA, as I said, grew 2.5% in the quarter compared to the same quarter in 2020. The increase was funded mostly by the reduced spend in operating expenses, totaling 8.8%, driven by continuous reductions across cost categories. Savings in operating expenses was partly offset by a gross profit decline of 1.1% year-over-year, due to mainly reduced revenues from legacy TV offerings. In Q2, TDC NET saw a stable development in Internet and Network gross profit, driven by a continued decline in legacy broadband, i.e. DSL, being counterbalanced by high-speed broadband, i.e. coax and fiber. Compared with Q1 this year, Q2 saw an improved trend on both GP and operating expenses. For Internet and Network and customer installations were the main attributors to the GP improvement, while operating expenses was reduced across cost categories. And as a result, Q2 has had a positive effect on our first half-year result compared with the first half of 2020. Capital expenses decreased by 17.1% as the 5G swap was finalized, and as fiber unit costs were reduced through negotiation with supplier contracts and insourcing of employees that previously were sitting in other partners that we were acquiring capacity from. Moving on to page 10, we will look at Nuuday and touch upon the highlights there. So in Q2, Nuuday realized an EBITDA of 469 million, which is 3.4% lower than the second quarter of 2020. However, comparing with last quarter, EBITDA in Nuuday decreased by 4.4%. This is driven by revenue increase of 0.5% year-over-year in Q2, however, a 4.2% decline in gross profit due to significant terminal sales in B2B following COVID-19. And of course, we don't have a large or even positive GP contribution on terminal sales in B2B, given that most of it is in larger contracts. Looking at the cost basis in Q2, Nuuday managed to reduce opex with 4.6% and 9.7% on capex year-over-year. In TDC Business, there was an important milestone as the large public sector contract was re-tendered and we managed to secure that. This means that TDC Business will continue to provide telephony, data and broadband as we have done for the last several years to a new total of 83 municipalities and several government bodies. The main addition compared with the previous contract is Aalborg Municipality. TDC Business has secured agreements with both the region of Zealand and Aarhus Municipality that both tendered separate contracts. This allows TDC Business and Nuuday to support the digitalization of the public sector by providing access to 5G from January 2022. Therefore, the TDC Business footprint will be present in public sector in the years to come. On the leadership side, we've welcomed John James as the new CEO of Nuuday to succeed Michael Moriel-Juul. John James brings with him over 20 years of telco and media industry experience and also has been part of a successful execution transformation in a number of larger and medium-sized enterprises. I imagine in the conference calls to come, I will make sure to get him introduced to you as well. On page 11, we check in on the financials of Nuuday. As mentioned previously, revenue increased with 0.5% year-over-year in Q2, driven by mobility services and terminal sales in the B2B segment. As a result of limited gross profit on terminal sales, the total gross profit in Nuuday declined by 4.2% year-over-year in Q2. Besides the impact from terminal sales, the GP decline was also driven by the customer base migrations away from mature services, i.e. low-speed DSL, landline voice, traditional TV, to more future-proof products where some of them has a lower GP margin. As a result, we managed to increase our customer bases across our Blancel and UTV products, along with high-speed broadband and mobility services, both comparing to the previous quarters, but also comparing to Q2 of 2020. Therefore, Q2 marks another quarter in which Nuuday continued to stabilize the customer base development in the core market, and of course, this continues to be a main point of focus going forward. If you look at our key markets in Nuuday, i.e. broadband, mobile, and TV, in totality, we lost just around 17,000 customers in the quarter, which is of a base of about 5.2 million. On opex, as mentioned, Nuuday recorded a decline of 4.8% in the quarter year-over-year. The main reason for the savings is in opex, where we saw a reduction in both white-collar and blue-collar employee costs, as well as external expenses related to facility, IT, and consultants. For capex, Nuuday managed to reduce the investment level with 9.6% year-over-year, driven by high degree of refurbishment, lower costs related to customer installations, and lower IT investments due to higher degree of refurbishment of modems, fewer TV set-top boxes, replacements, and lower IT investments. These savings came as a result both of general cost focus in Nuuday, but also due to the slimmer organization as a result of the efficiency improvement programs resulting from the new organization implemented first quarter this year. In totality, these events led to a decline in EBITDA of 3.3%, which was 16 million lower than the same period last year, but also significantly more stable than the EBITDA decline of the quarter. Let's turn to page 12, where I'll give a little bit more details on the Nuuday products and performance in Q2. Internet and network. So starting with internet network, revenue decreased in Q2 by 4.1% year-over-year in consumer and 4.6% year-over-year in business. The main driver was a decline in customer base in low-speed DSL broadband in consumer compared to the same period last year. However, this was partly offset by an increase in the customer base for high-speed connections following the significant speed migrations we did end of last year for our core customers. In business, the customer base increased slightly, however not enough to offset the lower ARPU year-over-year. On Nuuday broadband market share, we ended up with 40.8% in Q2, which is compared to a 41.5% last quarter, primarily driven by the migrations away from DSL to utility-owned fiber. Going forward, Nuuday continues to have focus on enhancing their presence in the fiber market through both TV agreements and agreements signed with utility companies. Mobility services. So in mobility services, revenue increased by 3.5% year-over-year in consumer and 1% year-over-year in business. In consumer, we generated the fourth straight quarter of positive revenue growth driven by an increase in customer base in Telmore and Easy. In business, the trend of positive net adds continued in Q2 2021, and the customer base increased significantly. However, the revenue is affected by lower ARPU due to changes in customer mix and negative impact from COVID-19 on roaming activities. Nuuday mobility market share was 38.7% in Q2, which is 0.3% higher than the 38.4% mark recorded last year. So of course, we're very happy to see an increase in market share despite the fact that we lost some customers in the consumer segment. On TV, we also have seen a significant improvement compared to last quarters. We saw revenue declining of 1.0% year-over-year in Q2, which was primarily driven by the decline in customer base on our mature products. The impact from loss of RGUs was almost offset by positive net adds on our growth services Blancel and UTV, along with the price increases on the entire TV portfolio that we did beginning of the year this year, and hence a higher gross profit margin in Q2 year-over-year. Our TV market share remained constant at 50.6% in Q2 comparing with Q1. This is despite the fact that we managed to increase the price across the entire portfolio significantly ahead of the market also. The RGU losses were lower than expected, and that development is very satisfactory for us. Landline voice revenue declined by 15.7% year-over-year in consumer division and 15.3% in business year-over-year. The decline was primarily driven by the continuous lower customer base in line with our expectations. On page 15, you'll find the leverage table for the TDC Group. TDC Group's net interest-bearing debt of loans, bonds, and cash was 21.4 billion Danish kroner and respectively 31.9 billion Danish kroner at DKT holding level. Liabilities due to mobile licenses and the effect from IFRS 16 on leases were 6.1 billion Danish kroner. Leverage at TDC AS, excluding effects of IFRS 16 and mobile licenses, was unchanged at 3.6 times EBITDA from March 2021 to June 2021. The leverage of DKT Holding was unchanged at 5.3 times EBITDA. The unchanged leverage in Q2 is supported by a total cash flow of minus 88 million Danish kroner. The cash flow includes a net working capital contribution of 228 million, of which approximately half of that is an addition to the COVID-19 support and postponed tax payment packages from the Danish state. The repayment of the remaining COVID-19 support packages is approximately 240 million, which will take place within the next year. So summing up, in Q2 2021, we saw a continued stabilization of our commercial performance across all main products. Especially, we're satisfied with improved trajectory in mobile services and TV. On broadband, we still experience the drag from mature services, but we see a good pickup on high-speed broadband. And of course, as we finalize integration to utilities end of this year, we should start seeing also a stabilization in RGUs on the mature services as we can migrate those to utility fiber. Also, we continued our cost savings, resulting in a stabilized EBITDA development in Q2 with a small increase of 0.8% year-over-year within our guidance of flat to slight decline in EBITDA. And with that, I'll now hand it over to Henrik Hjortshøj, who will moderate the Q&A session.